Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Chips are back on the menu as the tech rally drives Asian stocks higher for a second straight day. We'll preview the first Mag 7 earnings due later. Brent, meanwhile, nears a 6-week high and gas prices continue to climb as President Trump plays down the prospect of Iran talks and Houthi militants threaten shipping through the Red Sea. Plus, earnings season ramps up in Europe. Equinor posting stronger than expected adjusted earnings after tax as the Iran war drives energy prices higher. We'll be speaking to the Norwegian company's CFO later on in the show. Well, a very good morning. Here is the picture in markets this Wednesday. Asian stocks, as I say, up for a second day, boosted by the chip makers, and that AI enthusiasm offsetting concerns about rising oil prices after this renewed escalation in the Middle East. So futures pointing higher in Europe too. They are lower stateside, though, and you can see that both for S&P E-minis and Nasdaq futures, more pronounced when it comes to the tech index, although do note, we already saw a broad semiconductor rebound yesterday, which drove the Nasdaq to its best session since late last month. Now, turning to the cross-asset picture, oil gaining, as I say, to a near 6-week high as President Trump played down prospects for talks with Iran. Tehran says it wasn't even asking for more talks anyway. So Brent there at $92 a barrel, that sparking inflation risk. And already yesterday we saw Treasury yields at a 2-month high, the 10-year at 4.63, so staying put. And on the flip side of higher oil prices supporting the dollar, take a look at Japan. The yen near a 40-year low. Even if it's steady right now, it's weaker than 163 per dollar, and that testing Japanese authorities resolved to intervene to book the weakness. The question is whether the market would take any notice. Now, turning to the risk events on the agenda for today. At the top of the next hour, we're going to hear from the UK Office for National Statistics with inflation data expected to show CPI slowing slightly in June, but only to 2.7%, so still pretty sticky. We'll also get an announcement of new phones from Samsung expected, and we'll kick off, as I say, mega cap reporting season with Alphabet and Tesla earnings, both on the docket. Let's set you up for the day ahead. We begin with breaking earnings from Santander out of Spain, of course, and the bank beating estimates when it comes to net income, 3.52 billion euros. It comes in at compared to an estimate of 3.33 billion euros. Net interest income, 11.69 billion euros, again beating the estimate of 11.4 billion euros. It says that it is on track to meet its 2026 targets. And we're going to be speaking to the CFO of Santander on the opening trade at 7:30 a.m. London time. So really interesting to hear from the CFO of the continental Europe's biggest bank. Now turning to broader markets, the tech rally giving Asian stocks a boost this morning. Let's see how markets are faring with Winnie Su in Hong Kong. Winnie, what are you watching?
Yeah, good morning, Lizzie. We are seeing tech stocks extending gains in Asia for a second session, and in fact, taking its 2-day gains to the biggest in about a month. We're still seeing chip stocks continue with its rebound, and here gains being led by the likes of SK Hynix and Samsung Electronics after a pretty upbeat session in the U.S. overnight and some excitement ahead of the earnings from Alphabet. Now, it's also being boosted from some tailwind from how TSMC is set to be in talks to raise its prices by up to 10% next year. So that is providing a broader support for the broader Asia market. As you flip the board and take a look at where the benchmark is trading, we are looking at the MSCI Asia up just slightly, almost 8%. Now, that is also being helped by South Korea's Kospi index up nearly 4%, as brokers also say that they are seeing it getting close to an end of this unwinding of the leverage bets. And in fact, JP Morgan experienced it that 75% of those have been done already. When it comes to the cross-asset picture, we're looking at the Japanese yen, as you mentioned, crossing that 163 level against the dollar and hovering around those weakest level in 4 decades. And now, while we are seeing fluctuating despite those warnings from Finance Minister Tatjana, saying that authorities will be taking these bold actions if needed, but seems like markets for now ignoring those messages as they've been hearing that over and over. Now, flip the board, I just want to show you how volatile really South Korea's market has been, because today, yes, with the sharp gains, the exchange in fact triggered another sidecar, and that is the 8th that we've been seeing in a row. And in fact, over the past 15 trading sessions so far this month, we see that 80% of those have seen a sidecar activated. Now, we did see foreign investors stepping in to buy today, but overall, what we've been hearing, in fact, is that many of them still prefer to stay on the sidelines until they see these leverage bets being washed out further. And for now, they are keeping their trading sizes smaller, as well as having a bigger safety net for margins. Back to you, Lizzie.
Yeah, the Korean index more volatile than oil despite the geopolitics. It's wild. Winnie, thank you so much. That's Bloomberg's Winnie Su. Well, as she says, tech is dominating the equity picture today, offsetting concerns about higher oil prices. You are looking at Brent above $90 a barrel, nearing a 6-week high, as President Trump downplays the prospects of immediate talks with Tehran. Both sides exchanging strikes for the 11th straight night, and mediators nonetheless continuing efforts to restart negotiations. But Tehran has rejected US claims that it's seeking more talks.
Iran has been reaching out to the United States, both directly and indirectly, to engage in talks about settling the differences with regards to what's happening in that part of the world. Unfortunately, so far, even though we have reached agreements, they have not kept their commitments. And as the President stated earlier today, I guess, today Washington time, yesterday our time here now, the problem we're having right now is that they're not serious about talks.
Let's bring in Bloomberg Managing Editor for the Middle East and North Africa, Onur Ant now. Onur, good morning. Listening to Rubio, it sounds like there isn't any prospect of de-escalation there. Is that just, big talk, or is this actually going to be another forever war?
Well, de-escalation is clearly what mediators led by Qatar and Pakistan are trying to achieve to bring this latest flare-up and fighting to an end. But, Lizzie, we need to take a look at where things stand right now to see if there's really any possibility that might happen. The latest flare-up and fighting that began about 2 weeks ago really boils down to one thing, and that's what the interim agreement that was signed last month between Iran and the US says about the Strait of Hormuz and the passages through the waterway and who controls it. So far, there has been almost no talk about thorny issues such as Iran's nuclear issue, which is what these talks were supposed to be about. But instead, they have been unable to just come to the bottom of one single issue: what is happening at Hormuz and who controls it. And there we see a fundamental difference. Iran does not see Hormuz as a bargaining chip that can be used in these negotiations. Instead, it sees its future control over the waterway as a fundamental right that it won as a result of the early stages of the war, which it thinks it did not lose against the US. So unless there is an effort to bridge the gap in terms of their opinion over who controls or who should control Hormuz, it's really difficult to see a lasting de-escalation after the latest round of fighting, Lizzie.
And so a new sticking point because of this war is now the Strait, in addition to nuclear as well. Onur, thank you for the analysis. Bloomberg's Managing Editor for the Middle East and North Africa. Well, when you also flagged the movements on the yen, where it's been sliding past 163 per dollar for the first time since 1986. This as the greenback strengthened on the back of those renewed tensions Onur was discussing between the US and Iran. Now, warnings of bold action by Japanese authorities really have done very little to support the currency. So let's go now to Ven Ram, our cross-asset strategist at Bloomberg M Live. Ven, Japan's already spent trillions of yen on intervention. Can authorities really do more? Would traders even take it seriously if the government did intervene? One analyst says that it's like the market is laughing at the government.
Well, that's quite a bold thing to say, but I think it's every bit true. I think that the markets have continued to look through what Tatjana has been saying for a while now. In fact, she seems to be saying it pretty much every day. So the markets are looking through it because what Japan needs is not bold action, as she seems to imply, but bold action from the Bank of Japan, which seems to be falling behind the curve consistently. Now, you've got the BOJ itself projecting inflation to be about 2.8% this fiscal year. And if you look at the policy rate, it's at 1%. So and if you look at the estimates of the neutral, they're well above 2%. Even the more conservative-minded BOJ members would say the neutral is somewhere around 150. So the Bank of Japan is dragging its feet, and they are nowhere near hiking rates at the pace they need to be hiking. The benchmark rate is at 1% now, and they're meeting next week, and there is little expectation that they will raise rates next week either. So I think that, as long as the BOJ continues to drag its feet, the yen will be exposed no matter what Tatjana says.
OK. Ben, thank you very much. That's Ben Ram, our cross-asset strategist at Bloomberg Live. Well, it's still ahead. It's the start of reporting season for big tech firms, and results from AI spenders are going to be scoured for evidence that the investments are generating bigger returns. But first, speaking of earnings, Norwegian energy company Equinor has reported better than expected results, and we're going to unpack them with the CFO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:14 a.m. here in London. Well, Equinor says that second quarter earnings exceeded expectations as higher natural gas prices in Europe and a boost to its oil trading business from the Iran war have driven up profit. I'm pleased to say we are joined now by the Equinor CFO, Torgrim Reitan, here with us from Norway. Good morning to you. Let's just start with these earnings. Beating estimates when it comes to second quarter adjusted operating profit, beating estimates. What's your message then to shareholders this quarter?
Well, yeah, thanks and good morning, Lizzie. It's another solid quarter with $11.5 billion in operating income. Prices are up for sure. So both oil and gas. So revenue is up some 35%. However, the result is up much more. So it's up 76%, pre-tax, and 90% after tax. So this is the highest second quarter results ever, apart from the energy crisis in 2022. So a strong set of numbers. It is driven by strong operations with a production growth of 3%. And Norway continues to deliver new fields coming on stream, well on the way to deliver on sort of prolonging a high production level all the way to 2035. Our international business is doubling its results, on its way to deliver 80% growth in cash flow from operations towards 2030. And then our trading activities, a result almost twice as high as in a normal quarter. So altogether, we are well on the way to deliver on what we promised on our Capital Markets Day just a month ago. Cash flow growing 30% toward 2030, and we will continue to deliver industry-leading returns, return on capital employed of more than 15%. So a strong quarter.
Well, as you suggest, you are in the crosshairs of geopolitics. European gas prices surging again because of the disruption in the Middle East. I'm looking at European natural gas once again above 60 euros per megawatt hour, not far off the March highs. How concerned are you that we're heading in Europe into the winter unprepared without sufficient supply?
So, first of all, we do hope that the conflict comes to an end and we can go back to normal operations as such. But of course, we have to manage the situation, and our job is to provide reliable energy to Europe and the rest of the world, and we're doing our very best in doing that. When it comes to the European gas market, it is a vulnerable situation, and we are very uncertain about how we will enter the winter as such. And a couple of data points. Global LNG markets, 20% of that is sort of inside of the Hormuz Strait, clearly limiting international flows. And in Europe, 30% of the gas has to come from LNG. So there will be an increased competition for that. And if you combine that with sort of the current storage levels in Europe, which is at 53%, which is 15% below a normal year, it sort of tells a story about a very vulnerable situation. So we just need to be very much prepared for that. Even if sort of the Hormuz Straits open and we get back to normal, we don't think that Europe will get to the targeted storage levels before the winter. And that storage level is a very, very important data point. So we do hope that things are coming together and improves, but we just need to be very much prepared for managing the situation. We as a company, we clearly are very committed to produce as much gas as we can to Europe. We have a cost of $2 per MBTU into this market, and the price is currently, above 15. So clearly we will make profit related to it, but as important it is for us to be a reliable producer of energy to Europe.
OK, so you expect to produce more gas if prices stay elevated. What's the market getting wrong then about Europe's energy system?
I'm not sure, people are getting it wrong, but I think we need to be very careful in sort of taking for granted that this will solve itself easily. Because there is, LNG is clearly a very, very important part of the market. Around 30% of the market is LNG, and that is growing. And when that is combined with that Russian gas, the remainder of the Russian gas will move out of the market this year and next. A lot of more LNG needs to come to Europe. So we believe that in a few years, 50% of the market will have to compete with Asia for LNG. And with the situation around Hormuz, it clearly points in a direction with more volatility, more vulnerability, and a situation that needs to be managed as such. We will do our part, but clearly we do hope that the situation around the Hormuz normalize so we can get back to normal trading patterns and we all can help providing energy to a world that actually needs a lot of natural gas over the next years.
And when it comes to oil, how much of the geopolitical risk premium would you say is already embedded in the price? I'm looking at Brent today at $92 a barrel.
Yeah. It's a great question. And if I had a good answer to that, I would be very, very, smart. But it is obvious that there is a geopolitical premium to it. However, I think there is a risk that the market struggles to see, and that is at the first closing of the Hormuz Strait, there was a lot of oversupply situation. We could draw on strategic storages, and then the refinery runs has been cut in a way. So the world has been able to manage the situation actually at the first closing of the strait. This time around, it is very different because the storages are down. There are no oversupply situation, and the physical situation can much easily be visible in the market. So also within the oil market, we need to be prepared for a lot of volatility, and this can go very high, and it can also normalize as such.
Torgrim, let me just finally ask you about the UK, because we have a new Prime Minister in the form of Andy Burnham. What does his arrival mean for UK North Sea production? Of course, you've got a joint venture with Shell in the North Sea. It's the biggest producer there, I believe. What's the outlook?
Well, first of all, congratulations. We are used to work with many governments in the UK, and certainly there has been a little bit of training in changing governments in the UK. And we have proved that we work well with all, administration and governments in the UK. We will continue to do that here. Adura, the company we have together with Shell, is a growing company and is very committed to provide energy to the UK and also growing the production over time. What we need is reliable framework conditions. We need to be able to think long term, and we need to work together with the government to create that basis for it. The worst thing that can happen is changes in the tax systems and unpredictable regulations. So if anything, my wish to the new government is to provide us with the necessary predictability going forward, and then we will deliver jobs, we will deliver energy security, and we will deliver what is needed for the UK. But this is a very important collaboration with the government to make all of this happen.
OK, a very clear message for the Prime Minister and his new Secretary of State for Energy, Mjerte van Bulet. Torgrim, always a pleasure to get your thoughts. Thank you so much for joining us. That's Torgrim Reitan, CFO of Equinor, joining us from Oslo. Well, coming up on Daybreak Europe, the head of Ukraine's armed forces is sacked after nationwide protests. So we'll get you the details next. This is Bloomberg. Ukrainian President Volodymyr Zelenskyy has dismissed the armed forces commander-in-chief after nationwide protests. And we can get more now with our Chief Europe correspondent, Oliver Crook. Ollie, just for our international audience, give us the significance of this change of personnel. Does it show Zelenskyy's weakness on some level, that he's bowing to pressure from protesters?
Perhaps to a degree, Lizzie. It certainly makes his life a little bit more difficult. At the center of this conversation was a sort of power struggle at the very top of the Ukrainian military between the former defense minister Fedorov and this general who was the head of the armed forces, Syrsky, effectively meaning that the Syrsky, who is the older general, he's about 60 years old, sort of trained under this sort of a Soviet era and using kind of more Russian-style tactics, going by the name of butcher by some people, throwing a lot of manpower and, seeming willing to accept human casualties. He sort of won out on that power struggle, and there was a huge protest and an upswell within Ukraine objecting to this, and that he basically had that the defense minister, who's about 35 years old and who was really pioneering the sort of drone warfare that has been the lifeline for both the Ukrainian military but also the new Ukrainian nation. It shows that, yes, Zelenskyy, it makes his life more difficult. He has to sort of respond to this, but it also shows a leader of Ukraine at a time when, democratic norms are suspended because this is a nation at war, is still very responsive to the Ukrainian population, to their demands, to what they want to see happen. And it shows in the Ukrainian population that is still very engaged in the very tactics and the very nitty-gritty of how they're going about the war. It's not the first time Zelenskyy had to bow to public pressure. You'll remember last year there were mass protests because Zelenskyy effectively tried to take greater control over the sort of anti-corruption investigations that were going in Ukraine. You had a massive upswell of protests, but then again, you saw Zelenskyy sort of capitulate and bend to the will of the Ukrainian population. So listen, it depends. Obviously, it makes his life a little bit more difficult, but then it shows a leader that is still very receptive and still sort of reactive to the demands of a population.
OK, Ollie, appreciate the take. That's Bloomberg's Oliver Crook. Well, coming up, we'll discuss the outlook for markets with Tatjana Greil Castro from Muzinich, and that conversation coming up next as we look at futures pointing a touch higher here in Europe. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Chips are back on the menu as the tech rally drives Asian stocks higher for a second straight day. We'll preview the first Mag 7 earnings due later on today. Meanwhile, Brent nears a 6-week high and gas prices continue to climb as President Trump plays down the prospect of Iran talks and Houthi militants threaten shipping through the Red Sea. Plus, Santander and Equinor report better than expected earnings. But the Equinor CFO tells us on Bloomberg that Europe's natural gas market is in a vulnerable situation. Well, a very good morning. If you are just joining us, it's 6:30 a.m. here in London. This is the picture in markets. And it's different stories in the US and in Asia this morning. We have Asian stocks up for a second day, boosted by the chip makers. But already in the US, we saw a broad semiconductor rebound. So futures pointing lower on the Nasdaq at the moment after its best session yesterday since late last month. Futures here in Europe, meanwhile, somewhere in the middle. They are pointing a touch higher. Now, flipping to the cross-asset picture, oil, as I say, gaining up 1.3% for Brent at 92.21 the barrel. This is a six-week high nearly. President Trump playing down prospects for talks with Iran. That sparking inflation risk. And already yesterday we saw Treasury yields at a two-month high. So the 10-year holding there at 4.62. And on the flip side of higher oil prices supporting the dollar, the yen weaker than 163 per dollar. You've got Japanese authorities resolve to intervene being questioned. And now the question is, would the market even take much notice if there were a yen intervention? Now, let's turn over to the front pages as well this morning. We'll kick off with the Financial Times. It says that the new UK Prime Minister Andy Burnham is backing away from a costly increase to the income tax allowance, telling the first meeting of his new cabinet that the government needs to show fiscal discipline. We'll dive back into that in just a moment. But flip over to the Wall Street Journal, and it leads this morning on an exclusive report that President Trump has approved a landmark deal with Saudi Arabia to provide the country with its first civilian nuclear program, with American companies given a central role. And finally, here in Italy, in Europe, we'll turn to Italy. Corriere della Sera reporting on the Prime Minister's response to clashes in Bologna, this following the death of a Moroccan-born man in police custody on Sunday, and Giorgia Meloni calling it irresponsible to stoke hatred against the police. But you get a roundup of all the top stories you need to know in financial markets this morning in today's edition of the Daybreak newsletter, which as ever, terminal subscribers can find by going to DAYB Go. Well, as promised, let's dive back into the UK, and Andy Burnham pledging fiscal discipline in his first cabinet meeting as Prime Minister yesterday. But investors remain sceptical about how he's going to fund promises to ease the cost of living. With me now is Tatjana Greil Castro, Global Head of Investments over at Muzinich and Co. So really good to get your take this morning, Tatjana. Burnham said that he wants to be, and I'm quoting, boldly but prudently Labour. I wonder what that means to you. If you believe it, can he grow the economy, extend cost of living support without having to tap into more borrowing, without having to raise taxes in a way that would hurt the UK economy?
I think, there's so much to unpack, right? So let's see sort of it depends, really. We need to get to know him. I think he is a man of principle, but then what is the principle? And then is it very ideologically driven, or are we actually focusing on realities? And I think that is what we need to find out. And why do I say this? So we know that if your spending grows quicker than you grow the economy, you will either have to borrow or you have to raise more taxes. I think most of us would agree that the tax increase, well, first of all, it wouldn't save the cost of living because somebody will be worse off, right? So
as we saw with the payrolls increase.
Exactly. So somebody will be worse off if you want to raise taxes. So you're not better off if you raise taxes. And so we'll have to see that. And I think it has to really be seen if there is a change on if it is a party for people in work, or if it is the benefit party, as some call it, right? So, and I think that is really what you have to see. If people get back into work, then clearly that, and it should also pay them to be in work. And I think that would be the shift that I would like to see, for sure, that the market would like to see. I think that most of the UK would like to see. And how can you do this? Is where you go and say, and that is clearly because when Labour came to power, all MPs felt pretty safe. So, and then clearly the first benefit reform was shot down. But can we get to see come to a benefit reform? I think in the long run, that would be the only way where we can say we can solve this cost of living crisis. We can solve, because that would mean that the tax burden, doesn't have to go up. Earnings can go up, and more people will be in work. So I think that is really one way to tackle it. But it's a roundabout way to tackle it. But as Labour MPs don't feel as safe in their seats, then there may be a different approach to that. So we'll have to see, if they come back to that. And then in terms of, I think they're more likely to tap the borrowing than taxation.
Interesting.
And that, you can go and say, do we play games in this? But I think the market would actually be open to say, if there is more borrowing for investments rather than spending, and you can see that this is leading to growth, then actually, growth and borrowing can go hand in hand. But borrowing with no growth is clearly what the market doesn't like.
Well, that's interesting because, of course, Burnham said that he was going to try and find any flexibility within the fiscal rules, hinting at that side of the equation, borrowing to invest. But the market reaction wasn't positive. Then we had, of course, the appointment of John Healey as Chancellor, a surprise to markets. What's your read on Healey? Do you think he's, the best of a bad bunch? Are you reassured to see him?
I think the relief it is not Ed Miliband. I think was probably mostly what that relief was, right? And with some experience, sort of. As we very briefly said, if you have a few experience as a politician, it always seems like you have lots of experience. In the private sector, if you had worked somewhere for 2-3 years or maybe 5 years, it's not as much experience. But yeah, clearly he has worked under Brown in the past, many years ago, and so it seems to be a safe pair of hands. Seems to be. Sort of rooted in reality. I think that's some of it also, which you can't always say, that everybody is.
Let me also just ask you about the ECB meeting on Thursday, because the backdrop, of course, is the flare-up in tensions in the Middle East. You're quite confident, optimistic, at least, that talks between the two sides are going to restart soon. A hold's expected from the ECB, but when we look ahead to September, how much has the flare-up raised the chances of a hike in your view? How hawkish are they going to sound at this meeting?
So we always are part of the monetary analysts, the survey for monetary analysts of the ECB, and the last time we handed it in about 10 days ago, we were a 50-50 chance of a hike in September.
Right.
We would probably raise that now that it is very likely for them to raise interest rates in September, and that is just sort of with the backdrop of perhaps higher for longer oil prices. Having said that, yes, I personally think that we will go back to negotiations. It seems to be that Iran may be overplaying its hand a little bit at the moment, and that it is coming back to the negotiation table. I personally felt this memorandum of understanding was a great deal for Iran, and they should have really sort of taken that and worked towards that.
It seems shot to bits at the moment.
It's shot to bits at the moment, exactly. But it doesn't mean that you can't come back to a negotiation. So yeah, in that regard, I do believe that they will come back to the negotiation table, and it makes sense for everybody, right? So yeah, that's nonetheless. Given the recent flare-up now again, we have definitely a higher chance that there will be a rate hike in September. We don't think there will be many more to the extent that oil prices stay contained. And then clearly growth is not, is more lackluster in Europe. So to that extent, we can already see the lending survey that came out earlier in the week on Monday, I believe it was, where it shows that the economy is already suffering from the current situation. It's not necessarily because interest rates went higher, 25 basis points earlier, but it's just that the consumer is not willing to spend, and that clearly is, a big headache for Europe.
But a hike nonetheless, as you expect in September. Tatjana, really great to get your thoughts ahead of that meeting. That's Tatjana Greil Castro, Global Head of Investments over at Muzinich & Co. Well, now to some other top stories that we're following for you this morning. France has approved legislation restricting social media use by children under 15, becoming the first major European country to adopt such a measure. New accounts will be blocked from September, with the ban extended to existing profiles in January. Elsewhere, President Trump has given generic drug makers 2 years to move production to the US or face 100% tariffs from August 2028. The duties will then double to 200% a year later. The president has seized on the cost of drugs as a key driver of affordability concerns. Well, those are just a couple of our top stories from around the world. But coming up, big tech earnings season kicks off as investors look for clues that AI investments are paying off. We'll bring you a preview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. 6:43 a.m. here in London, and we are looking at Nasdaq futures down 0.6% this morning as we have earnings season heating up this week. Alphabet kicking off mega cap results later on today. Now, investors are going to be scouring these earnings for clues on how AI spending's reshaping tech, and we can get a preview now with Neil Campling, senior strategist for Bloomberg News. Neil, good to have you. So what are you really looking out for in these numbers? What's the bar so as not to disappoint the market?
Yeah, so it's all set up in terms of, are they getting the returns on these massive capex investments in AI, delivering through an accelerating top-line growth? They did show that last quarter, but now investors want to see it continuing to come through in results. So Street are expecting about 25% revenue growth, but within that, the key is cloud growth. It should be up 65% year on year, and obviously we're coming off very large base numbers. The other thing I think is that we'll be looking in terms of what are the capex spend forecasts, because that's where investors are kind of, in some respect, bullish around the picks and shovels of the chip stocks around that spend, but then concerned about returns. So we're expecting 2027 capex now to be 3 times higher than what it was last year. So they've got to show top-line acceleration to justify the big investments. And every word is going to be poured over in the earnings call tonight, for sure.
Okay. Well, before we get there, we also have this story that OpenAI says that its advanced AI models accidentally hacked Hugging Face. What's an accidental hack when it's at home?
I think what it is basically it's these tools are very sophisticated, and it's uncovering sort of problems in the coding that weren't necessarily expected or had been seen before. The biggest concern about this particular hack, maybe, is that it was when testing the cybersecurity tools. And if you remember, the US government were anxious about the cybersecurity aspects to these frontier models in recent times. So it's another kind of concern, if you like, around the use of good and the use of bad that can be used with some of these AI tool sets. And it will certainly will concern, I think, some people in Washington. So watch that space for sure.
Definitely will. Neil, thank you very much. That's Neil Campling, senior strategist for Bloomberg News. Now to some of the top stories we're following in the corporate space this morning. Supermicro Computer shares surged in extended trading after the company issued its preliminary fourth quarter results. The server maker says that its backlog of new orders hit a record in the quarter of more than $60 billion. It also sees second quarter gross margins in the range of 15% to 17%, which is nearly double its prior guidance. Elsewhere in tech, Bloomberg has learned that Apple is partnering with shopping and payments platform Klarna to launch a new leasing program. The service will work like a subscription model, allowing customers to pay monthly for iPhones, Macs, iPads and Apple Watches. And global banks are set for a fee windfall from SoftBank's record borrowing to fund its artificial intelligence push. Bloomberg understands the $40 billion bridge loan for SoftBank's investment in OpenAI will generate more than $100 million in fees for lead underwriters, including JP Morgan and Goldman Sachs. That's roughly the same as what lead banks were paid for their work on SpaceX's IPO. And back to earnings now. Santander has reported second quarter net income that beat the average analyst estimate as it added millions of customers. The bank says it's on track to meet its 2026 targets. And we can get some analysis now with Bloomberg's Rodrigo Orihuela out of Madrid. Rodrigo, good morning to you. What stands out to you from this pretty solid set of numbers?
Hi, yeah, so it was a solid quarter. What's clear is that their performance seems to be going across the board. There isn't one single business line or market that stands out. The bank a few quarters ago stopped reporting by country. Just as a reminder, this is one. It's a highly diversified bank that has big presence outside Europe, and it stopped reporting by country. It started reporting by its 5 business lines, and it seems that most of these business lines have done really well. But clearly, what is driving them is the performance with fees and with net interest income. In that sense, Spain is doing really well on the retail side, but also other countries. In the UK, they incorporated, or they brought on board TSB, the bank they acquired last year, and that is also boosting their earnings there, in spite of the fact that they had to take costs for restructurings that also had an impact, obviously, as expected, but that is part of the broader plan. In general, in the UK, they have also seen strong performance, as they did elsewhere. Even in Brazil, where they had a bit more of a patchy quarter, they were also up. It was also a thumbs up quarter for them there.
And what's the outlook going forward? Because you've got, of course, the war in Iran, global economic uncertainty, and Anna Botín talking about investment in AI as well.
Yeah, so those are two different issues, obviously, AI and the uncertainty and what's going on with the global economy. They didn't get into the global economy too much in the performances. What they do say is that, and it's kind of obvious, is that there is a risk from the Middle East situation for the economy and its outlook, both in Europe and in the US. But for their business so far, it doesn't seem to be carrying too much of an impact. In fact, they reiterated all their guidance for the year. They are seeing mid-single digit revenue growth for this year. They stood by that. They confirmed it. So we don't expect a new drag to be added from the Middle East so far. Regarding AI, what she said and what the bank has said, they said it earlier this year, is that they expect to have about 300 million a revenue boost of about, or expansion of about 300 million this year and in the next couple of years from AI. So clearly AI is going to be a big driver for them. And this is also very core to Anna Botín, who has traditionally been very interested on the tech side. This was before this trend with AI and everybody talking about AI. She was already focused on tech, and now with the AI stage we're living in, she is really, really on it and betting, and it's a big bet for the bank.
Okay. Well, let's also see if there's any comment from her on Spain winning the World Cup. Rodrigo, thank you very much. Rodrigo Orihuela. And just a little clarification, Santander added 12 million clients over the past 12 months, not the first half. We're going to be hearing from Santander's CFO later on this morning. That coming up on the opening trade at 7:30 a.m. UK time. Plenty more coming up on Daybreak Europe. Don't go anywhere. This is Bloomberg.
Because of some of the geopolitical risk in the markets, they are more actively trading, so that we see more frequent trading, but the trade sizes are often smaller. And so they're making more incremental trades because they're not exactly sure what's going to happen with the geopolitical situation.
Charles Schwab CEO Rick Wurster there on retail investors piling into the market amid all of the volatility. Well, what you're also seeing, as you can see in this chart, according to UBS's trading desk, is a return of momentum. So investors starting to rebuild their positions in AI and chip shares, as we very much saw yesterday. And this here is UBS's momentum basket. It's got the likes of SanDisk, Broadcom, Microsoft, and it had its biggest one-day gain yesterday since August 2022. So one thing to watch there. You also heard Wurster talking about the volatility in markets, a lot of it stemming from the geopolitical situation. So flip the board over and we can take a look at what oil prices are doing to the bond space. We have seen Brent back above $90 a barrel, and the result is it's been pushing on front-end yields, as you can see here. Now, finally, just one more terminal chart to frame your thinking for the day ahead. We're kicking off mega-cap reporting season, and Tesla is on the docket for today. As you can see here, what Wall Street really wants from Tesla is for the company to start putting its money where its mouth is. So far, it's only spent a tenth of the $25 billion in capex that it forecast in April. The big question, therefore, is whether Tesla's spending enough to deliver the progress that AI-hungry investors really want to see. But you can get all of these charts and all the others that you've seen on Bloomberg TV today by going to CHRT TV Go on your phone or on the terminal. Now, let's take a look at the other risk events on the docket for today. In just about 5 minutes' time, we're going to get the latest CPI data out of the UK. The expectation is that inflation slowed ever so slightly to 2.7% in June. Still 2.7%, pretty sticky. We're also expecting new phones to be unveiled by Samsung. And as I say, it's a big day for mega-cap tech earnings. We kick off the season with Alphabet and Tesla reporting as well. In the next hour, speaking of earnings, we're going to be joined by Azco Nobel's CEO to discuss that company's results. That interview coming at 7:15 a.m. London time on the opening trade. Tom McKenzie and Anna Edwards and Guy Johnson will be taking you all the way to the European Cash Open. So stay with us. This is Bloomberg.